Hello and welcome to Doch Na Tien Investment. This analysis is for Gilead Sciences on NASDAQ as of 7th of August 2026 with a share price of $130. The full report is on dochnatien.ca. A cash-rich HIV leader with no major patent cliff until 2036, trading in the attractive band after a Q2 beat and raise, and the medium call is buy, the long call, strong buy. Short term, it is a hold. The stock slipped below its 200-day average after the print, with no volume-backed reclaim, so there is no confirmed entry yet. Buy on confirmation, accumulate on weakness. The quality here is real and unusually durable. Gilead earns gross margins near 80% and converts almost all of its earnings into free cash. Second quarter revenue rose to $7.8 billion, the strongest base business growth in 3 years, and HIV growth guidance was raised toward 10%. What sets it apart from most large pharma is the patent runway. The flagship franchise, Biktarvy, is protected to 2036, so there is no meaningful near-term patent cliff. That funds 11 straight years of dividend increases and a diversification push into oncology. Low single-digit revenue growth is the honest soft spot, and the oncology bet is still unproven. On valuation, it screens cheap for the quality. The shares trade at about 13.6 times forward adjusted earnings against a warranted multiple of roughly 19.5 times, a ratio of 0.70, squarely in the attractive band. The free cash flow yield is near 6.5%, and the dividend yields 2.5% at a comfortable 44% payout. At today's price, the market is pricing in only low single-digit long-run growth, less than the pipeline can plausibly deliver. The consensus target sits at $158.44, about 21% above the price, though the street's most recent read has drifted toward the mid-140s. So why not buy today? The reason is timing, not the business. After the Q2 print, the stock slipped below its 200-day average, and there is no volume-backed reclaim of the 132 level and no discounted bounce to buy. The fundamental entry path is met. It is cheap with earnings now behind it, but neither the technical nor the catalyst path is. So the entry ladder reads, wait, and the conviction is only half size. The short signal is therefore a deliberate hold. The plan is to buy on confirmation, a reclaim of 132 on heavier volume, or on a tested higher low into the 121 to 127 support zone. The risks are real, and they are why the bear case exists. That bear sees the shares fall to about $112, roughly 14% below today, if Yeztugo uptake decelerates from its doubled pace, if drug pricing negotiation under the Medicare rules bites HIV net pricing, or if oncology disappoints again. The oncology worry is not hypothetical. The Trodelvy lung cancer combination with Keytruda was scrapped in June, a reminder that the cancer bet is unproven. There is also execution risk on the $11.2 billion of fresh acquisitions, which must earn their cost. The deeper thesis risk is the HIV core itself, a long-acting rival from ViiV and Merck taking prevention share. One reassurance, with a beta of 0.34 and no AI exposure, Gilead does not carry the market's concentration unwind tail. Its bear case is its own, not the index's. Now weigh the risk against the reward. The bull case is roughly 34% above today, the base case, the most likely, about 15%, and the bear case, a fall of about 14%. So you are risking about 14 to make 34. So, our call on Gilead Sciences on NASDAQ, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Doch Na Tien Investment at dochnatien.ca. The link to the full report is in the notes below. Have a great day.